Welcome to Smart Stock Watch. Today is 2026-0219. We're breaking down Royal Gold's fourth quarter and full year 2025 results, released February 18th, 2026. Joining me is John, senior analyst from Smart Stock Watch. John, great to have you.
Thanks. Good to be here. Royal Gold delivered record revenue and cash flow for both Q4 and the full year, and there's a lot to unpack across operations, acquisitions, and capital allocation.
Revenue and profitability overview. John, headline numbers first. Q4 revenue was $375.3 million, and full-year revenue topped $1.03 billion, record levels. What's driving that jump?
Two main drivers: materially higher realized metal prices and portfolio growth from acquisitions. Q4 realized gold averaged $4,135 around 2,663 year earlier, silver 54.73 ounce, and copper 5.3 pound. Plus, additions like the Kansanshi stream and the Sandstorm Horizon assets contributed meaningful incremental revenue in Q4.
Profitability looks strong on an adjusted basis. Adjusted EBITDA margin was 82%. Yet GAAP net income for Q4 was $93.6 million. Can you explain that gap?
Yes. Adjusted net income for the quarter was $155 or $192 per share, non-GAAP, versus GAAP net income of $93.6 million, $16 per share. The differences reflect acquisition-related costs, a $50 million loss on sale of marketable securities, and other adjustments management excluded to present underlying operating performance. On that underlying basis, margins and cash generation were excellent.
EPS forecast and analyst expectations. We had consensus data. Analysts were forecasting $2.68 based on two estimates. Royal Gold reported adjusted EPS of $1.92. John, how should investors read this miss?
It's important to separate operational performance from one-time items. Royal Gold delivered record revenue and record operating cash flow, but the adjusted EPS of $1.92 missed the small analyst sample, $2.68. Key reasons: one-time losses, the $50 million loss on sale of marketable securities, acquisition-related expenses tied to Sandstorm Horizon, higher interest expense from elevated revolver borrowings, and quarter-specific tax items that pushed the Q4 effective tax rate to 36%.
So this is more a timing and one-off issue than an operational miss.
Mostly. On an adjusted operating basis, the company showed strong cash generation, but the headline adjusted EPS shortfall and share count dilution from the Sandstorm equity issuance are near-term factors investors will weigh.
Acquisitions, strategic moves, and capital allocation. The company closed several major transactions in 2025. Walk us through the strategic impact of those moves.
Royal Gold completed the Sandstorm and Horizon deals and acquired the Kansanshi stream, all scale-enhancing transactions. These added recurring stream and royalty cash flows and diversified their regional exposure. The trade-off: cash and share consideration raised leverage and diluted near-term EPS, but management emphasized embedded long-term growth and optionality from extended mine lives and new assets.
They also increased the dividend, now $1.90 for 2026?
Correct. That's the 25th consecutive annual dividend increase, a clear signal about their focus on shareholder returns despite the acquisition activity. They also sold Versamate shares and used proceeds to repay debt, showing active balance sheet management.
Operations, asset developments, and outlook. On the operational side, what notable asset developments should investors note?
Several. Mount Milligan received permits to operate through 2035 and has a path to 2045, with future permitting and a planned plant throughput increase starting 2028. Pueblo Viejo continues mine life extension work, with permitting milestones expected in H1 2026. Xavantina's life was extended to 2032. These developments underpin sustained royalty and stream volumes and support medium-term revenue visibility.
How does that translate into volumes and GEOs?
Q4 GEOs were 9,800, up a 19% YOY, and full-year GEOs were 300,300. While full-year GEOs were roughly flat YOY, higher realized metal prices and the new assets drove the revenue and cash flow step-up.
Liquidity, debt, and cash flow dynamics. Let's talk balance sheet. Royal Gold drew the revolver and has significant liquidity movements. How healthy is the balance sheet?
The balance sheet is resilient. End of Q4 liquidity was $756 working capital plus undrawn revolver. They drew the revolver to fund acquisitions and later repaid portions. As of early Feb 2026, $725 remained drawn with $675 million available. Importantly, net debt to TTM Adjusted EBITDA is only 0.79x, modest leverage given their cash flow profile. Management expects to repay the outstanding revolver by early 2027 at current metal prices, absent further acquisitions.
Free cash flow was negative in 2025 due to acquisitions. Is that a concern?
Negative free cash flow was acquisition-driven. Sandstorm Horizon and Kansanshi cash consideration pushed investing outflows higher. Those are strategic growth investments. The company expects the added assets to drive future cash flow and leverage normalization over time.
Market reaction and overall sentiment. How should the market interpret this mix? Record revenue, cash flow, but an adjusted EPS miss versus the small analyst sample.
Investors will parse the release into two narratives. The positive narrative, record revenue, record operating cash flow, higher realized metal prices, strategic acquisitions, and a dividend increase. The cautionary narrative, quarter had one-time losses, acquisition expenses, higher interest cost, and dilution that pushed adjusted EPS below the limited analyst consensus. Without clear guidance updates, near-term reaction can be mixed. Bulls focus on portfolio growth and cash flow. Shorter-term traders may focus on the EPS miss and leverage movements.
Did the company explicitly respond to the EPS miss in their commentary?
The company emphasized transformational progress in 2025, the expanded portfolio, embedded growth optionality, and their focus on increasing shareholder returns, including the dividend increase and debt repayment actions. That's their response. Stress the long-term read-through rather than the short-term EPS variance.
Key takeaways. John, wrap this up. What's your bottom line read and what should investors watch next?
Bottom line, Royal Gold delivered a transformational year. Record revenue, record operating cash flow, and portfolio scale gains. The adjusted Q4 EPS missed a small analyst consensus due to acquisition costs, a one-time securities loss, higher interest, and tax items. For investors, watch integration of Sandstorm Horizon, cash flow generation from the new streams, Kansanshi, Warintza, progress on debt repayment toward early 2027, and any updated guidance or commentary on forward production and metal price sensitivity.
Thanks, John. That's all for today.
Thanks, and thanks to viewers.